History is full of financial manias, tulips, Beanie Babies, NFTs, all fueled by hype, scarcity, and a belief that someone else would come along and pay more. Skeptics say that Bitcoin is just the latest version of that, another bubble. So are Bitcoin buyers really just waiting for the next sucker to come along, or is there something happening here that skeptics are missing? In today's video, we're breaking down the greater fool theory. We're going to take a look at some of the largest speculative bubbles in history, and we're going to ask one big question. Are Bitcoin buyers the greatest fools, or is there something bigger going on here? Let's start by defining what the greater fool theory is. This is the idea that you can buy an asset without any fundamentals based purely off of speculation, with the belief and the idea that someone else will come along and buy it from you at a higher price. This theory relies on the belief that there will always be a buyer out there willing to pay more even if the investment is overvalued. It usually ends in a speculative mania, and most greater fools don't have a chance to get out in time. They end up being the sucker at the table and the greatest fool. Some of the largest speculative bubbles and manias we've seen throughout history only became obvious as the greater fool theory playing out with the gift of hindsight. The first documented speculative bubble in history started with the introduction of the first tulip bulb to the Dutch Empire in 1634. They quickly became a status symbol that fueled a mania unlike the world had ever seen. Rare, exotic, colored bulbs brought in speculators and traders that pushed prices to extraordinary levels. In 1637, one rare bulb sold for the equivalent of 12 acres of land. What came next was a complete collapse in the market, with growers being left with thousands of unwanted bulbs. Dutch commerce suffered a severe shock, and it ruined many investors. Alright, so don't take this personally, but if at one point you thought that your long lost Beanie Baby collection was going to make you rich, you might have been a greater fool. At the peak of the Beanie Baby mania in 1999, limited editions were selling for thousands of dollars. They accounted for 6% of all eBay sales, and it was reported that 64% of Americans owned at least one, and many were convinced Beanie Babies were their ticket to generational wealth. Thai Incorporated announced character retirements, leading to massive spikes in demand and unfathomable prices. It wasn't until years later that it became obvious that putting all of your money into stuffed animals wasn't going to make anybody rich except for the founder, Ty Warner. What if I told you that a digital rock sold for $1.3 million in 2021. This was close to the top of one of the largest modern day tulip style manias we've ever seen. They were marketed as digital collectibles with manufactured scarcity similar to Beanie Babies, but with no physical manifestation. Friends, family, cab drivers, and celebrities all wanted to get rich on NFTs in 2021. Justin Bieber dropped $1.3 million on a cartoon monkey, and today it's worth less than a used Honda. Thousands of people all over the world learned a really hard lesson in euphoria, speculative bubbles, and the greater fool theory that ended in ruin. We've seen some of these patterns emerge during Bitcoin speculative bubbles that feel very similar to Beanie Baby-like manias of the past. Companies like FTX explode following what seem like insane manias, with things like Super Bowl commercials urging people to buy Bitcoin close to the top.
With FTX, I have everything I need to buy, sell, and trade crypto safely.
A safe and easy way to get into crypto.
I don't think so. And I'm never wrong about this stuff. Never.
Scarcity is marketed as Bitcoin's killer app, its primary value add, and like other manias, the scarcity of Bitcoin is likely what fuels its price pumps. Bitcoin seems like an abstract digital token. You can't touch it or feel it like you can with other assets like real estate, companies, or gold bars. On the surface, it seems like belief and narrative are the only two things pushing the Bitcoin price higher. Stories of early Bitcoin investors getting rich pull in the new people, and then that pushes the price even higher. And when you hear Bitcoin investors talking more and more about the moon and buying Lamborghinis, I can see why many skeptics' red flags go up. And yet these so-called greater fools just keep multiplying. So let's pause, take a step back, and take a look at what the Bitcoin holders are saying. All right, so who are these greater fools? People buying Bitcoin today are relentless in preaching Bitcoin's name and trying to get new buyers to come in. People buying Bitcoin today believe that they are the smart money and that they see a massive monetary shift happening before the rest of the world. They believe that at one point in the future, Bitcoin will become global money and that it'll be used as a long-term savings account, similar to how people use the S&P 500 today. And while greater Greater Fool theory argues no fundamentals. Bitcoin holders would argue that Bitcoin is a sound engineering breakthrough and that it's the invention of digital scarcity. They believe that Bitcoin's fundamentals are strong enough to take it into the millions. Next question we ask is, are Bitcoin holders completely out of their mind? Will they be the ones left holding the bag? All right, so let's compare Bitcoin to the three famous manias that I talked about earlier. All three lasted a period of 1 to 3 years, with the collapse being about 6 to 12 months after the top. What makes Bitcoin very different from these other manias is that after each price collapse, it's reclaimed the prior high from the previous mania top. So if you focus on the floor price of each crash, it's actually gone up consistently over time. Greater Fool theory applies when there's no real value underneath, when you can only sell it to somebody else for a higher price. So let me break down for you what makes Bitcoin more than just a speculative asset. Let's start with scarcity. There will only ever be 21 million. That's hard-coded. Unlike dollars or NFTs, no one can make more. Next is fungibility. This means that every Bitcoin is exactly the same as every other one, similar to digital cash. And unlike collectibles, you don't need to argue about condition, addition, or quality. Portability means that you can send $1 or $1 million anywhere in the world in minutes without asking permission. Censorship resistance means that there's no government or bank that can block a transaction, and you don't need eBay to cash you out. Lastly, self-custody means that you can hold it yourself without relying on a third party. We all need a place to store our hard-earned value to escape inflation and increase our purchasing power, net worth, and quality of life over time. Bitcoin does have fundamentals underlying it that give it value, and I think this becomes a lot clearer when you compare it to traditional store value assets. Let's start with the S&P 500. It's tied to overvalued companies, business cycles, and political risk. If we take a look at Nvidia, it's trading at 55 times what their earnings are. I don't think this is because of current profits, but because people are desperate to store value and don't know where else to go. Next, we have real estate. It's a physical asset and it's easy to get leverage on, but it's difficult to move, expensive to maintain, and you're going to have property taxes for the rest of your life. Gold's been a store of value for the world for centuries, but it's difficult to store, hard to transport, and it's still being mined around the world. Next, we have cash. Dollars are not scarce. They can be printed by governments whenever they want. This forces people to invest and step out on the risk curve just to keep them. Bitcoin is not for greater fools, but a new asset that improves on store value properties that make it a superior asset to these other options that we have today. So I'll leave you with the question, who's really the greater fool? The one holding Bitcoin or the one that's holding dollars? My name's Austin. Thank you so much for watching, and I'll see you in the next video.